Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host Joel Alcana, along with Brianna Valesky, and we have Ryan Mallory on the line. He is founder of SharePlanner.com. Ryan, how you doing on this Thursday morning?
Doing great. Thanks for having me.
First of all, tell us a little bit about SharePlanner.com and what people can expect if they go to your site.
Well, SharePlanner.com is a site that I founded about 7 years ago, and it's a website that provides daily swing trade ideas, and it also allows people to follow me on any or all of my swing trades that I take myself each day in the stock market. So there's a subscription site, and there's a lot of free content as well.
Putting your money where your mouth is. That's something you don't see a lot in today's markets. All right, moving on here. S&Ps. Dennis and I were looking at a lot of charts here where stocks have just not only breached their flash crash low, but have exceeded it by a wide margin. S&P's still holding up 90 points above their flash crash low, primarily because of big stocks like Apple and Microsoft here. Long-term bull market. Ryan, is there anything that you're seeing that's shaking your faith in this bull market?
One of the stocks that has actually held up pretty good, and I mean it might take a little bit of a hit today, but I mean Tesla's one that I mean it had some craziness there a couple of days ago when Apple talked about its car coming out in 2019, but it just keeps on holding up really well, and there's a lot of support around this, like between like the 255 to 260 level, and I think if it can weather some of the storms that the market's currently having, that this thing could possibly be back at 285 and maybe even make a new all-time high. So I think that Tesla's just really held up against the storms really well.
Yeah, and then looking at the chart here, it definitely confirms that. So is this something that you'll play via the actual stock? Is it something that you try and trade? I know sometimes the options can be pretty illiquid in that. What is your trigger to get into the trade, and will you be using the actual stock or options?
Definitely equities. I've never really done the options on any of my trades. I mean, I've done them in the past, but I find that for me to consistently profit in the market, I do best from a personal standpoint trading those equities.
Okay. All right. So you mentioned the support here, the 255 area. I'm looking actually two lows at 55.80 and 55.87. Is 4 or 5 points? I mean, is that enough here in the trade, or would you extend the support a little bit more down to 252.88, which was your September 16th low?
Well, if I was putting a stop loss on Tesla, I'd probably put one, probably right around the 250 mark, maybe a little bit below it, and then with the profit target, around 285.
Wow.
And then let it go from there. So yeah, I definitely want to see Tesla make a run for those highs from July.
Okay. All right. Moving on. You just have to admit here, of all the stocks that have been holding up very well, it is the S&P 500's biggest component. Apple Computer. S&Ps are off 100 points from that high that we made. It was actually a week ago here after the Fed meeting. And now Apple hit 116.89 that week. Last Friday did dip under 112. Excellent relative strength in this, trading at yesterday's low here. What's your take on Apple?
Stocks for a lot of people to trade since that earnings announcement that they had. But if you look at the chart, and it's not what I would call an overly clean chart. But if you look at it going back to the beginning of August, you have almost what I would call a inverse head and shoulders pattern, to where the beginning of August you had that left shoulder, and then you had that big dip, obviously back in mid-August when the markets were going absolutely bonkers. So that creates somewhat of a head, but it's not, like I said, it's not a clean one. And then lately, you got this like mild pullback going from like 118 all the way down to like 114, and that could possibly be the right shoulder there. So if it eventually can get that momentum going again, through say 118. Then you have what I would think would be a confirmed head and shoulders pattern there.
Yeah, he's kind of
Inverse head and
yeah,
shoulders
inverse
pattern.
head and shoulders. The left shoulder's a little bit shorter here than the right shoulder. Just definitely getting some extended consolidation here. I've just noticed that over the last few days here, it's just been market's been going down. You expect it to go down at least as much as the market, but that hasn't been the case here. Moving on to some potential shorts here in the market. What's on your radar for that?
I have two of them actually. One of them is Microsoft, and it hasn't. The problem right now with shorts is trying to find one that offers a lot of really good a good risk reward setup. So that's one of the things I'm struggling with. Microsoft hasn't quite broken down yet, but if you look at it going back to May and you look at the price action from like May or late June through mid August, you have somewhat of a double top in that pattern there. It's not perfectly a symmetrical double top, but it kind of has the spirit of one. And then you have the big confirmation in August, and then you have the snapback rally, and then so you have this like rally, and then you have like a 3-4 week period of consolidation in Microsoft, and there you have like somewhat of a bear flag that's forming there, and then if it breaks below that 20-day moving average again, and it can get below, I would say, if it can get below like the 9/18 lows, the September 18th lows, then you have a pretty good setup there to where I think the stock could hit, let's say, 41.50, or even if the market gets really crazy, it could get all the way back down to those August lows again.
Yeah, long consolidation period, and a lot of times you just have to sit out these consolidation patterns. Held up pretty well earlier in the week. I know, the Skype outage is, a minor thing compared to the whole operations in the thing. I didn't try revenge trade on that because it messed up our show for a day. But 44, you're getting some sellers here at 44. Besides that 44, 47 high, three of the last four highs, I'll just give them to you: 43.99, 44.05, and 44.17 in yesterday's session. So it looks like we have someone targeting that whole $44 area. Last Thursday, I believe that's when you had a spike, ridiculous spike up to 45 even. That had been the high of the move. What's your other potential short out there that you're looking for a setup in, Ryan?
BID is a one that I'm actually really liking how it's pulling out of the consolidation that it has been recently in. It's you got three converging moving averages. You've got the 10, the 5, and the 20-day moving average all converge nicely upon the previous couple of trading sessions there, and right now, I mean, when you got retail, things can always get a little bit ugly in retail really fast on a day-to-day basis. So, right now it's trading at 34.30. I'd like to see this thing drop, well below its 32 price level, and then you have a stop loss on BID around 35.90. So.
Yeah, and if you're looking, a continuation pattern here, you had the drop here in July, and then you had the extended consolidation. You had another drop, consolidation, another drop, consolidation, another drop. Here, another extended consolidation here. Definitely the trend is your friend in this one, heading lower, Southby's common stock. Any take on this Caterpillar this morning? Axiom Capital initiates it at a sell and a $28 price target here. Holy smokes, that's $40 away. Would you try and get involved in something like this? Big news on it, or is it since you're not short it, you're not going to get involved with it? You just wait to evaluate it on another day.
I think if you're ever trying to catch that falling knife on the first day is dangerous. I mean, I think somebody downgrading it that much. I mean, it makes you really scratch your head why somebody would come out there and do something so like extreme. But trying to catch the knife on Caterpillar, I think on a day like today, especially where the market's already showing a lot of bearish tendencies to it, and trying to catch it, catch CAT on the drop, I think that you're just really playing with a lot of fire there, and probably letting there be like a base of like 3 to 4 days form where there's a little bit of a risk reward trade parameters that you can identify on the charts, and then and play the upside. At that point would be ideal because it's at 65 right now. By the end of the day, it could be at 60 for all we know. I don't think it will, but it just you just never know about these stocks that are just in a complete
Um,
free fall.
Additional news here in your Benzinga Pro here at 9:11. Caterpillar says most salary management job cuts will happen in 2015. We're almost into October. I think there's going to be some unhappy people here come holiday season at Caterpillar. They also see consolidation and closure of manufacturing plants through 2018. So holy smokes, did they ever pick a bad day to come out with some bad news here? Kind of going into what Gordon Johnson said there at Axiom Capital. Would you go like a sympathy plan, something like this? Would you is that part of your style where deer, same sector, more farm equipment related? That's trading in sympathies. Is that part of your trading style? Maybe look for some sympathy plays.
No, I mean the thing that you can do in deer is that if the price to the downside isn't accelerating as fast as it is in Caterpillar per se, you can and there's an opportunity to still latch on to like a trade on deer that's obviously going to be negatively impacted by Caterpillar. You can try to get in with a good risk parameters. Maybe on deer it would be using the intraday charts, and you're trying to use like a 30-minute chart that says, okay, if the stock climbs back above 80, then I'll get out. But for now, I'll try to ride this thing as low as it'll go. But really, I mean, DE almost seems like it knew something was up over the last 6 days because it's been going just straight down over that time period. So that one would be a hard one to trade today as well. It's because it's already been hit pretty hard over the last 6 trading days already.
Okay, and just for overall market indicators, do you like to follow? Do you follow the Dow, the S&P futures, the S&P cash? What's your favorite just to follow the overall market?
Oh, definitely the S&P 500. I try to weed out as much of the noise that I possibly can when it comes to news and everything else. I feel like the more that I just focus on the price action and the charts, and the less from like the the talking heads on TV and everything, the better that I trade. So the S&P 500, I'm price and volume guy solely, and that's what guides my decisions on whether I'm going to buy or sell on the equity front.
All right, so we're just about 100 points away from that high we made last Thursday after the Fed meeting, and we're just about 90 points away from that flash crash low FCL, as we will now refer to it. Just a matter of time here before we test that flash crash low.
I I think we're going to go back to that level again. I think the first thing it needs to do is break through the support. There's some support there at like between 1900 and 1911 on the short term time frame there. But once it breaks that, I don't see what's going to keep it from not going back down to the 1860 1870 area and then possibly even breaking it. So I am bearish on the market. And I think it's a very sloppy pattern, but if you look at the price pattern from the last 3 days, basically price is coming out of it in out of a bear flag pattern. And yeah, I don't see how we're probably not going to be testing those lows again, but the market's been pretty abnormal over the last 4 weeks. So, I guess you got to sort of expect the unexpected in some cases.
We've been on the line with Ryan Mallory. He's the founder of SharePlanner.com. He's a longtime swing trader, and founder of SharePlanner.com in 2007. Ryan, thanks for all the information. We appreciate it. We'll talk to you again soon.
Thank you.